Good morning, ladies and gentlemen. Welcome to the Q2 FY23 earnings conference call for Dreamfolks Services Limited. This conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. From the management, we have with us Ms. Librata Kalath, Chairperson and Managing Director, Mr. Balaji Srinivasan, CTO and Executive Director, Mr. Anurag Jain, COO, and Ms. Jia Dewan, CFO. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Librata Kalath, Chairperson and Managing Director of Dreamfolks Services Limited. Thank you, and over to you, ma'am.
Good morning, everyone, and thank you for joining our first ever earnings conference call to discuss the operational and finance performance for Q2 and FY23. This has been a momentous quarter for the company with a listing on stock exchanges, launch of new initiatives, adding new partners, and relentlessly working on being future ready, while providing our customers the most seamless and smooth experience of access to lounges and other touch points on their journey. We would like to thank all our shareholders and other market participants. Being our first interaction with the capital market participants and investors at large, post-listing on the stock exchanges, I would like to take some time to establish who we are and what we do for those who might be uninitiated and new to our company. Industry overview. The travel and hospitality industry in the last 2 years has been through a very rough ride due to the cumulative impact of multiple factors, from COVID-induced lockdowns that stunted international and domestic travel to rigid restrictions that called for social distancing and extra measures for health and safety, which brought along with it additional costs and halted the recovery of players across multiple verticals in our industry. Not to forget the drastic hit on the margins. However, with the warning off of the pandemic, resumption in business travel, and the booming event travel trends, we have started to see green shoots over the past couple of quarters and only expect these tailwinds to further increase, boding well not just for us, but for all our stakeholders and players across verticals in the hospitality industry. India has had a low air travel propensity. However, that is changing quite rapidly due to multiple factors at play simultaneously, ranging from greater disposable income in households, pandemic-induced lifestyle, preference changes, declining air travel costs vis-a-vis AC train travel costs. Additionally, on a macro level, the jump in ease of doing business in India and the economic growth and the prosperity of the country, especially in the challenging time as the one we find ourselves in, and in the inspiration to these shocks that we have displayed, has also aided rise in air travel. From a regulatory perspective too, the Government of India has pushed the UDAN scheme to increase air travel in Tier 2 and Tier 3 cities. All in all, we see a very strong upswing in air traffic and thereafter a preference to opt for value-added services such as lounges, spa services, F&B outlets, and more. We as a country also demonstrate favorable demographics with an immensely deep digital penetration and growing card user base, which increase the odds of this new crop of people to desire, adopt, and prefer air travel and increase frequency. Currently, only 8% of the eligible base of credit debit card user base are accessing lounges, Thus, the headroom for the growth that lies ahead is phenomenal. The credit card penetration is low in India and expected to increase exponentially, with industry reports suggesting that the credit card user base expected to grow 33 times in the next 2 decades. Lastly, even in terms of the infrastructure, we have only barely scratched the surface. We have 60 lounges in the country spread over 125 plus operational airports at the moment. This statistic is expected to steadily rise over the next 2 decades and expected to reach 200 plus airport lounges spread across 295 plus airports by 2040. About us, Dreamfolks Services Limited is India's largest airport service aggregator platform, facilitating an enhanced airport experience to passengers, leveraging our proprietary technology solutions. We began our operations in 2013 by facilitating lounge access services for one of the leading card networks and currently provide services to all our card networks operating in India. Our first mover advantage in the lounge access aggregator industry in India has enabled us to become a dominant player in the industry. We enable seamless connections between airport service operators and card issuers or card networks, with many-to-one connections and even in the event of operators changing over the years, establishing uninterrupted services to the end consumers. Clients on both ends of the spectrum tie up with us to enable their end consumer access service via our omni-channel mode to get multiple services during their journey at the airport. We have card issuers, card networks, and corporates on one end and lounge and other operators on the other end. With our proprietary in-house technology and platform enabling seamless services to the end consumers. We work with marquee names from various industry segments including card networks, card issuers, OTAs, airlines, enterprise setups, etc. We have established ourselves as a leading airport lounge provider with 100% coverage of all the lounges in the country and even hold a lion's share of all India issued card-based access to domestic lounges standing at 95%. In terms of our global footprint, we have business operations in 536 cities across 121 countries. We have around 1450 touch points, of which 250 touch points are present in India and 1200 plus touch points are overseas. As mentioned earlier, we have some corporate clients too, with whom we have started wide service offerings to enhance their customer engagement programs and also diversify our revenue streams, capitalizing on the growing propensity to use lounges amongst people across multiple categories and not just for business travel, but for leisure too. These clients range from airlines to online travel agents to enterprise setups. Additionally, the heightened waiting times at airports have created the added need for access to the lounges and thereby is an added advantage for us. As a part of a CSR initiative, we firmly believe that by educating and empowering a girl child, we are facilitating the growth and development of an empowered woman who has potential to contribute immensely to the empowerment of our nation. Under Mission Saksham, we aim to provide education and health support to the underprivileged girl children in rural Gurugram, and as a part of our initiative, we work closely with Government Model Sanskriti Primary School, Village Tigra, and Sahanshir Foundation Project, Bagia in Gurugram. We do not believe in any kind of gender bias. Merit is all that matters. These girls need the right kind of backing and a platform to showcase their merit, and that is exactly what we at Dreamfolks aim to do. Our objective is to contribute as a catalyst for their advancement. Coming to our human capital, like we operate on an asset-light model when it comes to our tangible capital asset. Similarly, our business model is not human resource intensive. We operate with a lean team size of 60 full-time employees, including the senior management, and carry out our operation in an optimal and effective manner. We encourage our employees to volunteer and participate in all the social activities we organize to help them contribute back to the society. Having thrown some color on the nature of services provided, I would like to ask Mr. Anurag Jain, our COO, to give a quick rundown of the quarter and half year gone by, the performance, the major developments, and the operational highlights.
Thank you, Debrata. Good morning, all. A bit more detail on the operational highlights. So our platform and services portfolio allows card networks, card issuers, and corporate clients to build bespoke solutions addressing disparate aspects of the airport services for their consumers. Card networks and card issuers can avail of any of the services and may provide complimentary lounge access and complimentary access to other services to the consumers as part of their offerings under eligible credit and debit card programs, and we enable this access across services. Corporate clients, they also leverage our solutions to extend benefits to the user base as part of their consumer and employee engagement programs. As part of the diversification strategy beyond the financial services sector, our solutions have created ancillary revenue opportunities for airlines and OTAs by enabling them to cross-sell and upsell our services to their ticketing customers. We focus on the operators who provide the services and give them the option of a single point access to the consumers along with consolidated footfall and revenue, while also providing them technology to validate the benefits available to consumers, provide card-based and digital access and billing. There's been a strong growth of about 110% in domestic air traffic in H1 FY23, which has already surpassed the pre-COVID level. Domestic air traffic has grown by around 60% in Q2 FY23 as compared to Q2 FY22, and we've seen a record high footfall in the airport lounges primarily due to our early arrival requirements and the higher engagement from card network providers as well as issuers to avail various offers and services. Number of passengers availing the lounge access and other touchpoints through us has grown at a healthy rate of 240% year-on-year in H1 FY23 and 140% in Q2 FY23. In H1 FY23, passengers accessing the airport lounges stood at 3.6 million compared to 1.1 million in H1 FY22, thus reflecting a recovery in the travel industry growth. For Q2 FY23, passengers accessing the airport lounges stood at 1.8 million compared to 0.76 million in Q2 FY22. Our number of lounges in India has also grown from 49 as of 30th September 2021 to 60 as on 30th September 2022, indicating a growth of 22%. I now ask Balaji to take you through the technology discussion.
Thanks, Anurag. So I'll just give you a flavor about our technology platform. So what we do is that we provide clients the option of providing their end consumers different mechanisms to access certain airport-related services like lounges and all the other services that we spoke about on the call, via the more traditional mechanisms like credit cards, debit cards, forex cards, etc., or also our Dreamfolks membership card, or via digital solutions such as mobile applications, and all of that is enabled using our hybrid technology. Our entire Dreamfolks platform is proprietary and has been developed in-house. The platform and the technology is cloud-based, and it allows lounges and other operators to check the benefits of the consumers based on the cards, memberships, or vouchers, and also allows access to the different facilities based on the benefits or integration as per our clients such as banks or networks, processes, and their systems. Our platform actually comprises of quite a few components. There is benefit configuration, there is benefit calculation, there's the entire management engine, there are data exchange APIs with different banks and networks, and integration options to embed into different mechanisms, including with our partners. Our platform also facilitates the use of hybrid access modes depending on the client's preference, so they can use whichever mechanism that is most beneficial for them. It also facilitates lounge access processes so that consumers' benefits are checked and synced in real time across various access modes. And that drives accurate accounting and is designed to prevent abuse and denial of services to consumers. Our hybrid access model allows the clients to provide the consumers digital-only options, which is new, or provide solutions where access can be through both physical cards and or digital cards, and the client digital application of the Dreamfolks app. What we are seeing more of in more recent digital model integrations are that clients are integrating the lounge benefits and access mechanisms into their own mobile apps that comes within the client apps. Our in-house developed proprietary tech platform is designed and aimed at a hassle-free experience for the consumers. Our superior tech platform stack forms one of the multiple modes that we have at the company. We'll just hand it over to Jia to go and help us walk through the financials. Jia?
Thank you, Balaji, and a very welcome to one and all attending this earnings conference call. To lay the picture out in terms of some metrics, we currently have 125 plus operational airports in the country and total 60 lounges. As per industry reports, the number of airports is expected to reach 295 and a number of lounges would cross 200 by 2040. Thus, with increase in numbers of airports, number of lounges, growing air travelers, and an increasing propensity in them to use lounges, with a simultaneous increase in the size and offerings of lounges, not to forget the rise in number of card users, Dreamfolks is well poised for growth with dominance. On the company front, we are proud of the fact that during this time of upheaval too, we have managed to stay afloat, be profitable, without letting go of any of our employees, and instead we have emerged stronger, hungrier for growth, rewarded our employees for their support, and continue to stay strong, firmly marching on our path towards higher growth and stronger margins. Speaking of our revenue performance, our revenues reached 1,712 million for quarter 2 as compared to 605 million for the same period in the previous year, leading to a 183% growth year on year. Our EBITDA closed at rupees 211 million for the quarter as against rupees 38 million for quarter 2 FY2022. As regards our EBITDA margins, they have risen from 6.14% in Q2 FY2022 to 12.25% in quarter 2 FY2023. The PAT clock for quarter 2 FY2023 was rupees 148 million, vis-a-vis rupees 25 million in Q2 FY2022. Similarly, the revenues for the half-year period stood at rupees 3,315 million as compared to rupees 850 million for the same period in the previous year, resulting in a 290% growth year-on-year. The EBITDA for the half-year stood at rupees 406 million as against rupees 30 million for half-year FY22. EBITDA margins improved substantially, rising from 3.47% in half-year FY22 to 12.19% in half-year FY23. Lastly, the PAT for the first half of the year is rupees 283 million versus rupees 11 million for the first half of the last year. Our major expenses are linked to employee compensation and in-house R&D expenses. And being an extremely asset-light company with a very lean organizational structure and size, we don't have any major capex needs or other outlays, and we are confident of financing any future scale-ups or expansions through our internal accruals. With no direct customer acquisition cost and high operating leverage, we have a healthy EBITDA profile. With negligible finance cost and low depreciation cost, we have a track record of generating higher single-digit profit. Strong profitability and asset-light business model has helped us deliver significantly higher double-digit returns to the shareholders as well. We recorded a ROCE of 69% and ROE of 50.6% during half-year FY23 on a non-annualized basis. On the business development front, we have recently tied up with Dhanalakshmi Bank, further expanding our foothold with card issuers and thereby facilitating a new card user base with accesses to lounge. Another major tie-up through this quarter is with FCM Travel, a truly strategic partnership with high synergistic values. Coming to lounges, it is with great pride that I can share that we have tied up with Aspire Lounges Australia. With this partnership, air travelers can now experience exclusive luxury lounges access to Sydney, Melbourne, Perth and Brisbane as part of 66 Aspire branded lounges globally. With this, I would like to hand over the call to Librita to highlight the way forward for the business.
Thank you, Jia. So taking you forward for the way forward for our business, our next phase of growth is centered upon three levers: cross-selling and upselling to existing clients, acquiring new clients in existing and new sectors, and via geographic expansion, from a purely domestic focus currently to an international focus in predetermined geographies. With the existing clients, we aim to increase wallet share and expand our association beyond airport lounge services to include F&B, spa, meet and assist. Synergistically, we have a deeper integration of client system with the Dreamfolks platform, leading to recurring revenue and thereby maintain 100% of coverage of airport lounges. As regards new clients, we aim to expand into new sectors to create customer engagement and provide loyalty management solutions. Another focus area is to focus on customer engagement and loyalty solutions for corporate clients and build specific solutions for loyalty companies, e-commerce companies, new age digital companies, hospitality sector companies, and neobanks, amongst others. Lastly, a major focus area and one in contention is that the geographic expansion, which can be already seen with over 1,200 plus touchpoints globally and with tie-ups such as Aspire Lounges Australia partnership. We intend to replicate a similar successful operating model by leveraging our deep knowledge of industry, technology innovation, process expertise, and business model across new high-growth markets, which include Central and Eastern Europe, Middle East, Africa, and Southeast Asia. We at Dreamfolks hold a strong business moat by virtue of what we call the Dreamfolks flywheel, which is in sense a combination of three elements. Higher number of users lead to more number of lounges. More number of lounges lead to more banks and brands being attracted to this line of services. As an outcome of that, a wider bank and client coverage attracts more users. Moreover, build a successful bridge between clients and airport lounge operators creates independency for Dreamfolks service offerings. With that, I think we can open up the floor for questions.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Saurabh Mehta from East Lane Capital. Please go ahead.
Yeah, hi. Congratulations on strong results. I have 3 questions. First is, can you give some idea on the revenue mix? Lounge access, meet and assist, F&B, airport transfers, like we know lounge access is the majority of the revenues come from there, but would just like to get an understanding on the other revenue streams and the unit economics on those. The second question is, if you can elaborate on the first half versus second half seasonality. Is second half much higher, like probably 55-60% of the annual revenues? And would the margin also then be much higher there? And the third question is, basically, if you could give some broad framework on the overseas market strategy. Like, what is the progress there? We know the touch points, but how much do we need to invest more, and when will we start seeing meaningful revenues from there? Yeah, that's it.
Sure. So I'll start with your first question, which is revenue mix. As we discussed that, our major revenue comes from lounges, and in last couple of years, we have been adding these new services like airport transfers, meet and assist, food and beverages offerings to our users. These services are currently picking up. If you look at the current mix of the lounge versus other services, it is 95% versus 5%. Moving on to your second question, wherein you were talking about the seasonality in the first half versus the second half. Yes, if you look at the industry, seasonality plays a major role here. The second half of any of the year, for that matter, is always higher than the first half of the year. Okay? Look at the trend also historically. It is primarily anywhere between 40 to 45% in the first half of the year, and second in the second half, rest in the second half of the year. due to the simple reason that the festivals and the holiday season kicks in only starting from August, September. Right? That's how the industry shapes up, and that is how our business also grow in the similar lines how the industry grows. In terms of the broad framework on our overseas strategy, if you look at our spread across the world, we have already been, onboarding the lounges and other service operators across the board. We are present in 121 countries. We have closed more than 1450 touch points, out of which close to 1200 touch points are overseas. Maybe I can ask Liberta to throw some more light on it.
Sure. So as you were asking about, if there would be any additional investment which would be required for the expansion, I would say there would not be any major investment required because the way we have built the business in India, it would be in the similar lines. So it would be more in terms of the solution where, in terms of the hardware, deployment in the other regions. So that would be a very small portion of investment which will be required, and that would not be the major investment.
Thanks. That's it. Yeah, thanks. That's it from my side.
Thank you. The next question is from the line of Dipesh Kashyap from Equirus Securities Private Limited. Please go ahead.
Yes, hi everyone. Thanks for taking my questions and congrats for a great performance. In the PPT, ma'am, you have mentioned the total volume for Dreamfolks stood at 3.6 million packs in the first half of FY23. Will it be possible to share the overall launch access volumes in India, both domestic and international, so that we can basically calculate the market share going forward?
So this number actually gets published in the industry reports. As per the latest, there is no latest industry report available. So we will have to wait for the next version to come in the market before we could share that information with you.
Okay, but like last published, our market share was around 68%. So according to your, it should be similar?
We will not be able to comment on that because we don't know the larger number. We only know our numbers.
Got it. Secondly, will it be possible to give a split of the travelers going to the domestic lounges and the international lounges? And what will the pricing points of the two in this quarter, please?
Yeah. So if you look at, the pre-COVID level, the spread used to be 70-30, which is domestic versus international. Since the international is yet to pick up 100%, we are currently at a split of 85-15, which means 18 is domestic and 15 is international. However, the trend is, we have seen this trend changing drastically over a period of last half a year.
Got it. And can you share the pricing points, ma'am? Overall number is 900 rupees, right? So how will it be in the domestic and the international?
Yeah. So pricing point varies for us based on lounge to lounge and whether it is domestic lounge or international lounge, of course. But the blended rate comes at 900 rupees.
Sure. And also, Liberta ma'am, I just want to check with you that a number of lounges have increased to 60. So do you have any sense on visibility that how many lounges are expected by end of FY23 and FY24, if you can share? And also, there will be many lounges which may be increasing their space, right, due to higher traffic. So if you can give any color on that, please.
See, there are a lot of developments happening in India in terms of privatization of airports happening, right? So we would not be able to comment on exact numbers, what would be the exact number in, in coming years. But we would say that yes, there would be a drastic, improvement and, the changes happening.
Got it. Last question for maybe GMM. On the balance sheet, the investment property has increased to 8 crores in September versus 2 crores in March. So just wanted to check if this is anything new investment or some recategorization in the balance sheet.
No, so it is recategorization of the balance sheet. Earlier it was part of the capital advances, and that's how it has now, after the possession, it has got transferred to the investment property.
Understood. Thank you and all the best. Thank you.
Thank you. The next question is from the line of Jehan Bada from Nirmal Bang. Please go ahead.
Congratulations to the team for getting listed and for this maiden con call. My question is on steady state growth, what can that be over the next 4 to 5 years? And if you can explain how you derive that number.
Okay, so if you look at the industry forecast, that's what we can talk about right now. If you look at the industry forecast and the reports published recently, it talks about that FY2023 is going to get back into the pre-COVID level. And from there onwards, especially from FY21 to 24 CAGR, if we look at as per the latest industry report, it's forecasted to grow at 40%. That's how the outlook is looking out for our industry.
So can we expect Dreamfolks also to replicate that number?
We'll take a cautious view and probably discuss this in detail in our next call. But what we can talk about here is that the industry is definitely, showing a good forecast trend.
Right, great. Okay, and my second question is on, there is this discussion going on by RBI that it may reduce the MDR rates on credit card companies. So going forward, what credit card companies also have indicated that if this were to happen, then they will reduce rewards and services they offer to protect their margins. So if this were to happen hypothetically, then how will this impact Dreamfolks?
So again here, it's a business sensitive discussion, so we would want to take a little cautious view over here and would not be able to discuss this here.
Okay, but in your view, is the credit card companies, are they likely to cut costs? I mean, there are various aspects where they can cut on their rewards, etc. So like how do you perceive lounge access as in their eyes? Is there a possibility that they could take some action over here? Yeah.
So we understand your question, however, we would not be able to answer it on their behalf.
Sure, no issue. Okay, thanks a lot and all the best.
Thank you.
Thank you. The next question is from the line of Mukul Garg from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks. Hi, Luvita. Good morning. Luvita, just one question from you and one from Jia. On the international expansion side, can you just help with some more detail of the updates you have seen over the last few months? Any particular change which is likely to happen soon, and how should we kind of think about the growth of international business over the next 6 to 9 months period? And Jia, from a overall broad mix of domestic versus international passengers, if we kind of go back to that 70-30 mix, down the line, based on current lounge rates, what would be a broad range of revenue per pax which you would have been kind of generating if it was 70-30 instead of 85-15, which is there right now?
I request Liberata to take up your first question on international expansion.
Sure. So as you have seen that, in terms of the touch points, the way we are actually expanding and with our recent few tie-ups like Aspire as well. So yes, as a strategy right now, we have been, adding more and more lounges and other services as well, including meet and assist, airport transfer as well into our portfolio. So yes, the plan is to, add more such lounges and more cities and more regions into our portfolio, wherein, the Dreamfolks client's customer can actually avail access and have the benefits across the globe. the plan of what we would be doing in these regions. As we have said that, yes, the strategy is to have the expansion of clients in the other regions like the Middle East, Southeast Asia, and European countries. So that is in plan, and I think by next couple of quarters, we would see that we would start seeing the numbers coming from these regions as well. I think Jia will give you the reply for the second question.
Sure. So Mukul, if you see the split, we spoke about the 70-30 versus 85-15. Of course, your understanding is right that they do change the blended average what we have, because as I mentioned earlier on the call as well, that the rates vary from lounges to lounges, whether it is at an international location or a domestic location, and also it varies from cities to cities. So as the blend changes, of course, the average blended rate also changes to the upward.
Understood. And also now that we are already 1 month into Q3, any initial sense you can share with us in terms of how the overall travel as well as lounge access is right now? Is it kind of playing out on expected rate, or is it faster or slower versus what the usual seasonality is?
So Mukul, the footfall is dependent on the traffic seasonality. And we spoke about the seasonality trend in the industry as well, right? So once the festival season and the holiday season kicks in, that's how the trend changes. That is how it functions for us as well.
Sure. Thanks for answering my question, and best of luck for your quarters ahead.
Thank
you. Thank you.
Thank you. The next question is from the line of Bhavin Shah from Sameeksha Capital Private Limited. Please go ahead.
Yes, thanks. Our first question is, when I look at the results for the first half, compared to your profit before tax or operating profit, your operating cash flow is like less than a third of that. So what is happening? Can you explain that? Is that going to be the way it is going to be in future?
So one part of the cash flow is definitely the receivables, right? So as that's a normal growth based on the growth in the revenue. And however, the interesting part you might have noticed is that we have a negative working capital cycle. Now, as a classification also, I'm sure you might be able to get to see net cash and cash equivalents. However, the investment portion, as per the reporting standards, gets reflected in other parts of the balance sheet line items. So though you would see the balance in the bank account here as a net cash and cash equivalent, whatever investment we have made in the fixed deposits or other such formats you would get to see in other line items of the balance sheet. So ideally the way to look at it is the total of our investments and the cash and cash equivalent compared to the similar period in the previous year.
No, but I understand what you're saying, but I look at the first half of this year, you had operating profit before working capital change of 41 crores, and you have operating cash flow of 11 crores. So if you have a negative working capital, why is this happening? I can understand there is 8 crore of tax. So from 41 crore, I take out 8 crore, that's 33 crores. So from 33 crore, how do I end up with 11 crores?
So look, we are talking about 28 crores of PAT, right? And if you look at balance sheet, there is a cash and cash equivalent of 14 crore and other bank balances of 22 crore. Correct? That is the free cash generated from the business.
I don't see 22 crore. I see your balance with banks at 14 crores versus 28 crore last year, same time. And I don't see... And then I hardly see any significant items in the investment, cash flow from investing part. So, I mean, sorry, I don't understand.
Yeah, so I will take you to the balance sheet. Cash and cash equivalents and other bank balances put together is what you need to see there. Because if we are investing in, say, for example, fixed deposit, it doesn't get categorized as per the accounting standard under cash and cash equivalents. It gets categorized under other bank balances. If you are comparing your profit after tax versus the cash generation, that is the amount to compare with.
Yeah, so I look at the balance sheet, it will be the same story. Because the other financial assets are 6 crores, other non-current asset is 9 crore, and all those figures are down from last year. Only thing that is up is investment in property, but again, that's a small amount. So I don't know, financial assets, mostly the increase is in trade receivables.
Yeah. So trade receivables, as I mentioned, it's a normal growth based on the growth in the revenue. Because if we look at during that quarter revenue, that was 850 million. That half year revenue, that was 850 million, while this half year is 3,315 million. So the receivables will grow in that proportion.
I've been looking at cash flows for the last 30 years, okay? This is the first time somebody is telling me don't look at the cash flow statement and look at something else, and you look at something else, it still doesn't add up. My simple question is, how do I get from 41 crore of operating profit before tax to 11 crore of operating cash flow? So what is happening?
I'll try to explain again that if there is 41 crores of operating cash flow from the operating activities, there is an amount of fixed deposit investment also which has happened.
Fixed deposit doesn't come in the operating cash flow, ma'am.
No, not after that. I'm talking about after that. 41 crores versus 1.9 crores is what you are seeing, right? Half year 23 versus half year 2022.
I'm not looking at 21. I'm just looking at half year 22. How much is the increase in fixed deposit?
Increase in the fixed deposit is actually, if you see, that is close to 10 crores.
Okay, so 10 crore is that. 8 crore is for the tax. So that's 18 crore. I still don't get the numbers to match. I still think I guess it's all working capital increase. It must be.
Because there is an increase in the receivables, working capital, which I had mentioned.
Okay, so then how do you have a negative working capital side?
We do have a working capital in the sense that we have our receivable cycle, which are shorter than our payable cycle. So we pay after our receivables come into our account.
Okay, fine. I think I'll just take it offline. I have a question on this domestic versus international split that you given, which is 85-15 right now.
Yeah.
That out of the 15, how much is from the international, from the credit cards used by, the domestic credit cards used by people anywhere, whether in an international lounges, versus you also have some relationships with non-Indian entities. So, is that the part of international? What is that split?
So in case we have to actually see the split, I would say that, our majority of the revenue is from the credit card and the debit card programs. Okay. So I would say
of domestically issued credit card and debit card?
Yes.
Okay, fine. So you had some deal in Korea, but that's more for providing the software, is it?
No. So let me just take you through. So right now when we talk about the touch points, right? So these are the locations what we have, which is across the globe what we have done our lounge tie-ups, right? However, right now the customers who are using these facilities outside India are from India issued cards only. So it is through the credit card program wherein the banks are either issuing a membership card, which is a Dreamfolks membership card, or it would be a digital app or a voucher. But however, they are the Indian cardholders or the Indian customers using the lounges outside India as well.
Okay, fine. Now, globally, lounges are used. In many cases, the access is based on the tiering with an airline, and I think there is a bigger prevalence, I suspect, compared to the credit card, which is a dominant prevalence in India. So in case this MDR rates are indeed changed, I mean, people do use lounges. So how do you see the, how would the business dynamics change for you? I don't expect, I mean, while there might be some temporary drop in the use of lounges because, if somebody has to pay money, then they may not, they may not use it, or if, the credit card companies, reduce the offering, then also it will come down. But then still there will be a lot of people wanting to use lounges. So how do you see that? How do you plan to play in that kind of a situation?
Okay. So if you have actually seen, the list of clients or the way we have actually started adding more sort of different set of clients apart from the banking, right? Like Vodafone is a client. Now we are also working with the OTAs and also started working with the airlines as well. So what we are trying to do is we are also trying to diversify in terms of adding different set of clients, which will actually add more such things. So, I will not be able to actually reply exactly on the MDR charges and the impact what it's going to have. But as a company, I think we already have a strategy in place in terms of having diversified client base and not just focusing on banking.
Okay, thanks.
Thank you. The next question is from the line of Chetan Shah from Jeet Capital. Please go ahead.
Yeah, hi. Thanks and congratulations to the entire team. Just one quick question. Could you just give us some color and a flavor of our non-lounges revenue mix? As of now, it is just 5%. You kind of explained that there are a few things which you are doing, and if you can give us some sense that how this mix will change in next 3 to 5 years, and what is your optimum comfort zone, and how do you want to take this forward? Because we kind of understand the lounge part of the business, but the non-lounge part of the business, how do you see that evolving?
Sure. So the thing is that, I would say that lounge would still be the larger part of the revenue in coming years as well. However, yes, the way we would see it that, the other services, the way it would contribute, I would say in a couple of years, maybe 2 to 3 years down the line, the trend would certainly change from which is 5% now to maybe 15% in coming years.
Okay, so you mean to say that even our lounge businesses will keep growing the pace at which we are looking at it, but the non-lounge will grow at much faster pace, and that's why the mix will be tilted and that will improve. So another question, in terms of the margin, the non-lounge businesses are equally profitable, or there is a little lesser margin there? If you can share, that would be very helpful, please.
So in terms of the other services, also we have similar margins the way we have for the lounges. And as you rightly said that, yes, the way the lounge growth is, because there are more and more lounges coming up, not just in India, but globally as well. And that's where we say that, yes, the revenue from the lounge business would be always at the higher side.
One last question from my side, ma'am. When you speak about global expansion, so right now we are already kind of available at 1,200 odd touch points, but the problem which we have is that this is actually meant for the customers whose card has been issued in India, and the one who travels abroad can actually use it. So if you can explain us that can we, so what you did for say Australia or other country like Korea, which you spoke in the past, how do you see that usage of non-India lounges expansion where the card is being issued outside India, and those travelers, whether they travel internationally or within their own country or a sector, can improve our revenue mix? So some sense on that strategy for next 3-4 years will be very helpful.
So as we mentioned that, in terms of our expansion plan, we have already mentioned that, yes, we are focusing on regions like Middle East, Southeast Asia, and Europe as well, right? So yes, so it would not be limiting to India cardholders using lounges across, but even from these regions and, the customers or the cardholders or the end users will be able to access these lounges. So we are in process, and I think I will not be able to share in detail about what exactly is happening, but yes, soon you will see changes happening in these regions as well.
Thank you so much, ma'am, and wish you all the best for the future.
Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Ankit Pandey from Quant Mutual Fund. Please go ahead.
Hi, thanks for taking my question. Congrats on a good quarter. I think my first question is around in the international monetization. Let's just say if we categorize our clients, direct clients, directly into whether they are banks or whether they're card networks, in your experience and estimation, how would you say that the pickup or offtake of our services and revenue would differ if our revenue was either led by banks or by card networks? How do you think the offtake would differ?
Ankit, we would like to take a little cautious view over here, and maybe probably at this point in time would not have a discussion. Maybe in the later calls we can have this discussion in detail.
Sure, I understand that. Thank you. The other question would be on, do you have any estimation on, in the domestic credit card circuit, what is the average actual usage of free lounge access versus what is permitted? Do you have any statistics around that basic thing?
So Ankit, yeah, if I were to look at a matrix where you are talking of actual usage versus permitted, that may vary from various card issuers to various variants of the card. But an overall industry figure mentions 8%. It talks about 8% utilization on the 60 million cards that were eligible for lounge access. And this I'm talking of a pre-COVID figure.
And just to clarify, these are a number of users rather than the ratio between the total benefits versus that. So we don't have that data. This data is for users who are using the lounge benefit.
The footfall penetration would still be around 4.5-5 figure. What would that be?
Sorry?
The footfall penetration, the lounge penetration.
Yeah, the lounge penetration in terms of as a percentage of the total people traveling.
Right.
Yeah, that's about 5.8% was the figure as per the last quarter.
Okay, so only 8% of the people use lounge access in any case, and still the overall penetration is still around 5% or so. Okay.
Yeah.
So this 8% is from the last industry report.
Right. No, I get that. That might have risen also. That's great. Okay. And last one from my side, the ESOP cost. If you could give what would that be in the quarter prior, this quarter, and what would be expected if the plan goes through in Q3?
Okay. So we have already started factoring the ESOP cost, and that was part of FY22 financials as well. Now, if we look at this quarter 2, and a quarter-on-quarter basis, we can expect anywhere between 1.8 crores of expenses getting built in our employee benefits expenses.
No, this is for quarter 2 that has passed, or is it for quarter 3 that is right now in progress?
This is for quarter 2 that has passed.
Okay, and what would be expected in Q3 if the plan goes through?
With the same base of the grants which we have done so far, it's going to remain the same.
Of course, yes, but if the full plan goes through?
Look, the pool size is quite large, right? And as we say, we work with a lean team. So it's going to take next few years to exhaust the entire pool for us.
Right. So you're not able to give the estimate?
I think we'll take a little time before we crystallize the next plan for us in terms of the grants, and would be able to provide you these numbers in much more detail.
Okay. And Q1 was also the same, 1.8 CR figure?
Yes. Yes.
Okay. And just in terms of the ESOP pool, it's about 10% of the entire equity base. It's fairly sizable. How would you say the design of the ESOP is as far as the employee coverage is concerned? Would it be relatively narrow as has been so far, or will it be broadened out a bit more?
So as part of the plan, it would be for the broader set of employees.
Okay. Thank you so much. All the very best.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is from the line of Jeevan Patwa from Sahasra Capital. Please go ahead.
Yes, madam. So I have only one question, something related to what one participant asked about the cash flow. So if I look at March 2022 balance sheet and September 2022 balance sheet, there is an increase of almost 70 crores in the trade receivable part, and as against that, in the trade payable part, there has been increase of 55 crores. So trade receivable has gone up by 70 crores and trade payable gone up by 55 crore, and I think that's where the 15 crore negative cash flow has happened. So you said that you basically pay later, you first receive and then you pay. That's what you said, right? So just want to understand why receivable is 70 CR and why payable is 55 CR.
So that is how the cycle functions, right? That the cycles for receivables are longer than the cycles for the payable.
Okay, so what is the cycle for receivable and what is for payable?
I think we would not be able to get that much into detail. However, the way we function with our stakeholders is that based on the number of cycles which we agree for the payable for our operators is definitely longer than what we agree with our clients. And that's the reason you're getting to see 70 crores versus 55. And this growth is purely based on the growth in the revenue.
No, growth in revenue is completely acceptable. That's why it's been gone up since as compared to last year. But I'm just trying to understand. So you said there is a negative working capital. That's what you said. So I'm just trying to understand why it's negative. Then you are saying it's not negative working capital cycle, right? Because your trade cycle, receivable cycle is longer than payable cycle.
So let me give you just one data point that.
If you can just tell me the cycle, maybe a customer walks in the launch, right?
There is a difference of. Let me tell you, there is a difference of 8 to 10 days between my receivables and the payables.
Okay. Yeah. So it's not negative. That's what I'm just trying to confirm. It's not negative working capital cycle.
So when we say negative working, which means I pay my payables later after I receive my receivables.
Okay.
That's where I do not have a working capital requirement. If you look at net cash flow used in operating activities in the cash flow, it is a positive 11 crores. Okay?
No, I think there is some confusion. Maybe we can later clarify this. Second question is, you said there is a 8% penetration in the credit card holders or debit card holders. So if there are 100 people having debit card or credit card with lounge access, then only 8 people are using it. Is that understanding correct?
Correct.
Yes.
Okay. So is it so every credit card or debit card has certain lounge access, free lounge access, right? So when you say 100, is it the free lounge access that you are talking, or is it a total, or is it just that the number of people, 8 people out of 100 people, or is it 8 free visits, or is it 8 free visits out of 100 free visits?
Yeah. So it is. We are not taking the number of free entitlements. We are only talking about the number of credit cards or debit cards that have been issued that have the complimentary lounge access, And of that total issued base of that total of credit or debit cards or even forex cards for that matter, the number of transactions on the cards that we see.
Okay, so it may be that every credit card may be having only 4 free entitlements, and all those 4 may be getting utilized. Can that happen?
It's possible, and there are also, if you think about it, a large set of credit cards that have got unlimited, benefits as well. So we are discounting all of that because, depending on that. So
and do you have that kind of data? If you get a credit card or a debit card in your system, do you know how many entitlements it has?
Yes, because that is a benefit that is part of the card benefit design. And when we work with our client partners, such as banks or networks, that benefit is actually set up on our environment.
Okay, so is it possible for you to actually send an SMS to the customer whenever he uses the allowance saying that now 2 free entitlements are still remaining for the year?
Absolutely, but that journey is not defined by us. Actually, what the different clients...
Can you do that? Can you send that SMS to the customer?
Let me just clarify. The banks and the clients are actually owning that customer. It is not our client really, right? Mm-hmm. So depending on the bank or the partner, they are doing the technical integration with us, and they are exposing digital interfaces, whether it be in their own app or be it different mechanisms like web or physical card or whatever. So the journey is defined as per the client process, but technically they decide whether they want to send that confirmation or not. So technically it's possible, but it's really their customer and they define the consumer journey.
So we can't actually send any kind of SMS to the customer?
Depends on the contract. It depends on the client. It's not our call.
Okay, because if that happens, then I think if customer is aware that he's still 2 free entitlement remaining or pending, then I think he might use it before it's over. So I'm just trying to understand. So we can actually increase the lounge access. Thanks a lot. Thanks a lot.
Sure.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you everyone for joining us in this earnings call. We at Dreamfolks Services Limited will continue to expand on the initiatives undertaken and progress made over the past few years. The strong position that our company has been in over the years will only further solidify with streamlined, efficient operations and incredible talent pool delivering high-quality offerings and further strengthen the deep relationships and networks built over the years. Once again, the presentation, earnings release, and results have already been posted on the company's website and stock exchanges. Please feel free to contact any of us or strategic growth advisors if you have any further questions. Stay safe and take care. Goodbye.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Dreamfolks Services Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.